Good morning. This is Larry McMillan with the stock market update on Monday, December 6th, before the market opens. So last week was a pretty ugly week, and I guess for the bulls, the good news is that the market is getting very oversold in some areas, so buy signals are probably not that far away. The bad news, though, is that there are no buy signals yet. And so oversold markets can continue to go down farther than one might expect. Yes, it is December, and yes, it is usually a seasonally positive period, so perhaps the damage will be a little bit limited by that. But let's review the indicators. So S&P made a new low again on Friday, and it's definitely in a downtrend. An oversold rally could take it back into that 4630 to 4700 resistance area, but I would expect it to have trouble at that point. If for some reason it were able to get above 47.05, that would turn everything bullish again, but that doesn't look to be in the cards, at least not right away. The Macmillan volatility band sell signal is still in effect, almost touched the -4 standard deviation band on Friday, but not quite. Equity-only put-call ratios are definitely still on sell signals. That was very heavy put buying on Friday, so that accelerated the ratios towards the upside. But one day is not going to make the difference here. We need, these are 21-day moving averages, so they have to roll over, and that's going to take a while. So that remains on a solid sell signal. Market breadth is extremely oversold. We're seeing some of the most oversold conditions that we've seen in history, almost tying the lows of March of 2020. So we're going to get a buy signal from breadth pretty soon, but it's going to take probably 3 days of positive breadth just to do that. And so we're not looking to catch the falling knife here. We're not trying to pick the bottom on, be a hero. So we're not, when these buy signals come in, the market will already have come off the bottom a little, but there should be plenty of room left on the upside after that. In March of 2020, it took really almost 20 days for the buy signal to materialize. So just because they're oversold does not mean you should be jumping in there and trying to buy things. New highs versus new lows is in a very similar state. New lows are dominating right now. We're seeing some of the biggest differential between new highs and new lows that we've seen, again, since the March 2020 lows. So that's oversold. Again, oversold doesn't mean buy. So we're waiting for 2 consecutive days of New York Stock Exchange new highs to dominate new lows to give us a buy signal. That's probably not going to happen right away. There's an indicator that probably give the first buy signal. It's called the Oscillator Differential, and that's the difference in breadth oscillators between New York Stock Exchange data and stocks only data. Again, that's at in fact, last week it actually reached the lowest level it had ever reached. Now, what does that really mean? Well, it's all of these indicators that we're talking about, the market internals, are telling us that the average stock is getting killed and S&P is not. And that's been going on for a while, but now we're really seeing it in like a double down mode. And so this is not good for the market in general. When you have this kind of discrepancy, eventually things happen and stocks catch up to S&P, usually on the downside. So, I wouldn't get too excited about these upcoming buy signals, but they will still be worth trading. Volatility, we do have a VIX spike peak buy signal in place right now, so that's the only confirmed signal that we have, with the exception of the seasonality being bullish in December, which so far hasn't worked out very well. So VIX, so we have a VIX spike peak buy signal. On the other hand, VIX is trending higher, and a trend in VIX is not a higher trend in VIX is not good for the stock market. So VIX and its 20-day moving average are both well above the 200-day moving average, and that creates an uncertain environment. Now, the construct of volatility derivatives is not as bearish as some of the other things. The term structure of the VIX futures has not inverted to a negative state. I mean, it was close by a few pennies, but to me, that doesn't really cause for concern. If the front month December VIX futures trade, let's say, a point above the January VIX futures, then that would be a cause for concern. So right now the term structure is not a real problem, but it's certainly not positive like it was a while back. So in general, we have a bunch of negative indicators, only one buy signal, that's the VIX spike peak, and we have a bunch of oversold conditions that are going to be buy signals pretty soon. So right now we're holding several put positions, long puts in line with the sell signals that do exist in the market right now. And we will be trading any buy signals, confirmed buy signals that come along, but we're not going to buy just because the market is extremely oversold. That could work out, but it could be a disaster too. So that's not the way we operate. Anyway, I invite you to visit our website. We are going to be having some Christmas specials coming up. It's a little early for that, I guess. December specials. And anyway, good luck and good trading.